The person who is in charge of US Federal Reserve is Jerome Powell. In a way, he is entrusted with a twin mandate of maintaining full employment and also maintaining price stability in the American economy. So, in a recent event that was hosted by the Economic Club of Chicago, when Jerome Powell rose to speak, there was palpable excitement because people wanted to know what he thought of Donald Trump's policies. So, referring to the trade policies, Powell said that this will create enormous amount of challenges for the central bank to meet its job and inflation mandates this year, literally admitting that his job is now going to be much tougher than he ever imagined, because he said these are very fundamental policy changes and there isn't a modern experience of how to navigate around it.
A new pattern that has emerged calls into question the safety of what has been the bedrock of global financial system. In other words, the American treasuries. Let me explain. Over the last couple of weeks, a very unusual pattern has emerged in the financial market developments in the United States. Generally, during phases of uncertainty, there is a higher demand for safe assets. And what that does is it pushes down US Treasury yields, which means lower interest rates and higher bond prices. But over the last fortnight, what was noticed is that US Treasury actually went up with its yields. And when that happens, generally it leads to capital inflows into America, which in turn tends to boost the US dollar. But then again, strangely enough, the dollar declined even as US Treasury yields go up. What this suggests, according to former Treasury Secretary and Fed Janet Yellen, that investors are beginning to shun dollar-based assets, which is why I said this calls into question the very bedrock of the global financial system, because this is a pattern suggestive of a loss of confidence in US economic policy, and it literally derails the bedrock financial assets, which again becomes a matter of worry for the world at large. Large-scale sell-offs of American bonds could pose a problem for the world's biggest economy, making it more expensive for it to raise the money to finance its budget gap. If the American government cannot sell its debt, it is then unable to pay for things such as Social Security or flagship programs such as the Medicaid. For the first time in 24 months, investors had started to demand a bigger premium to hold junk-rated American debt over European equivalent, reflecting fears of a slowdown in the world's largest economy. With the odds of an American-led global recession going up with every passing day of policy twists by US, it is bad news for the global economy. So, end of it all, are Donald Trump's policies more penny-wise and pound-foolish? Is it going to drive in a global recession?